Welcome to Colorado Commercial Real Estate Investments Training, brought to you by Bittner Commercial Advisors. Today we're going to talk about the third deadly sin, failing to understand and limit the risks of investment. There are a number of areas of concern for the investor of commercial real estate, particularly with recent economic uncertainty and the subsequent impact of the credit crunch. There are many ways that you can reduce your risk if you take the time to anticipate, monitor, and manage the risks within your real estate portfolio. Some of these risk reduction strategies include the following. Take some time and look for properties that are currently renting below market value. By having the opportunity to increase rents, the risk is automatically reduced due to increased cash flow. Also, negotiate favorable financing. Lower interest rates will provide greater cash flow, reducing leverage risks. If you invest in property with a high down payment, if at all possible, you can reduce your leverage with greater equity interests that can pay greater dividends. Monitor the current interest rates and market rates frequently, since they're one of the best indicators of real estate prices. Learn to recognize the signs of a market upturn or downturn that make it a good time to sell or buy. Understanding the paradox of the local real estate market can prevent you from making costly purchase mistakes. Study foreclosure laws and sales, as foreclosures are likely one of your best sources of inexpensive property. When choosing this route, it's important that you understand the ramifications of foreclosure techniques to avoid getting caught with an unexpected condition to a sale. Examine each property you plan to buy and be critical. Inspect documents and perform a thorough title search to ensure that there are no existing liens against the property. Avoid being caught by surprise with unexpected expenses by having a thorough inspection of every property, preferably by a reputable and qualified engineer. Perform credit and reference checks on your renters if you're leasing or renting the property. Check court records, personal and job references. History remains one of the best barometers of a person's ability to pay lease costs in a timely manner. Research the possibility of a limited liability company, particularly if you intend to hold properties over the long term. Investigate the formation of a limited liability company, LLC or LP. This is particularly prudent because in the event of a lawsuit against you as a property owner, an LLC can protect your personal property and savings from attachment and limit collection to only those assets owned by the company. Don't rely on high levels of appreciation. Don't make the mistake of looking at past history, whether current or not, and assume that the future will produce the same results. Even if the property has been consistently appreciating at a rate of 10% or better for a number of years, expecting this rate to continue is extremely dangerous. It can result in you overpaying for the property, as you may be inclined to speculate that you'll recover an overpayment with increased appreciation values when it comes time to sell. If this doesn't happen, you'll end up suffering a loss, or worse, being stuck with the property. Don't let the availability of good financing result in a careless purchase decision. And also remember that cash flow trumps everything else. To learn more about ways to safely invest in Colorado commercial real estate, download our free report, The 7 Deadly Sins of Commercial Real Estate Investing, at www.bittnercom.com. If you're looking for an investment partner, we can help. Michael Bittner of Bittner Commercial Advisors has over 20 years' experience in successful commercial real estate partnership development for an elite group of investors. Please call Michael at 303-442-6565 or go to www.bittnercom.com today. Thank you.